Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and we are going to talk about my 2026 Toronto real estate market predictions. This is actually one of my favorite videos to record each and every year. Usually, what I do is a recap of what happened and talk about what I think is going to happen in 2026. So let's dive right in. 2025 recap. Well, in short summary, we had record low volumes. Prices were down about 5% across the board. We saw active listings rise. So it was a really challenging environment for sellers. Great opportunity for buyers because there were some really great deals for those who were patient, but a lot of hesitation in the market, which is understandable given the environment that we're in and all the uncertainty that we have in the world with military conflict, tariffs with the United States, certainly our economy slowing down, all that impacted greatly on the psyche of the buyer. So we saw a lot of uncertainty in 2025, which translated into like the slowest sales volume year since 2001. Okay, so that's what happened in 2025. Let's talk about where I think 2026 is going. Let's start with sales volume. Now, I just told you that sales volumes was at a 21-year low, which is pretty unbelievable considering how much the city has grown since that time. Now, my prediction, and this is not an overly bold prediction, but it's going to be my first prediction, I think sales volumes are going to increase from last year to this year. So we're going to see a modest increase, but I still think we're going to see an uptick in sales volume. I think that's going to, we're going to see some confidence return to the marketplace second half of 2026. I'm not suggesting that we're back to bull market. I'm not suggesting that, we're going to see some crazy activities. Like I know some of the skeptics out there might say, oh, you're a real estate agent. It's your interest to say how great the market is and it's going to be. That's not what I'm doing. I'm saying the market is challenging, but I'm also suggesting that, we're going to see a slight improvement. I think, the signs are there that Q3 and Q4 will return to a slightly better market that we're seeing. I still think the first half's going to be tough. I think we're going to see more of the same. Active listings are going to rise. I also think prices are going to be coming down slightly, but we're going to talk about prices in a moment. And sales volumes going to be, similar to where we were in the first half of 2025. Okay, average price. Everyone wants to know where prices are going. That's one of the questions I get all the time. And obviously, I do not have a crystal ball. And I'm basing all this information, we're recording this in January 2026. So still a lot of the year to be had. And, it's really hard to determine where things are going at this point. But this is kind of the fun of the video. I'm giving you my, boots on the ground, what I'm seeing, what I'm hearing, who I'm talking to, where prices are going to go. And I think, again, this is a little bit bold to suggest, but I think prices are going to be higher than where they were at the end of 2025. If anyone was following our videos, the market was pretty stable until Q3, Q4, which was interesting, especially considered we had, the tariff sort of drama back in March, April of 2025. But we saw some weakness at the end of the year, and that's because active listings were rising, and that's pretty normal. So I think we're going to have a sluggish Q1 and Q2, but I think we're going to see a little bit more optimism return. So that means by the end of 2026, I think prices will be modestly higher than they are now. So that's my first somewhat bold prediction. Now, region predictions. I said this last year, and I still feel the same way that 416 is going to lead the market. One of the things that we have noticed with talking to a lot of buyers is that, there is slow demand that's coming back to being in the 416. And part and parcel is because we're seeing a lot of employers now requiring back to work back in office, back to work schedules. So that's put some sort of decisions for families and employees to maybe come back and move to the city. And I'm not suggesting that everyone's doing that, but there is a segment that's talking about that, and I think that's really going to help the 416 edge out the surrounding 905 pockets in 2026. So now Freeholds is, I think, going to modestly lead the market again in 2026. What was interesting, if you watch my last month's video of the market update, I talked about how there was greater weakness that was forming in the freehold market than there was in condos. Like, one of the stats that I love looking at is months of inventory. So like, how much of the inventory is churning, in specific segments in pockets of the city. And it was interesting. We saw months of inventory actually come down for condos in the 416. And that was, I think, sort of the first indication that we've seen in quite some time that, I'm not suggesting the condo market's back or anything like that, but I think there's, with less supply, there becomes less pressure on prices to come down. But obviously you still need buyers to step up, and investors have not come back to the market. And I don't think they really will in earnest. Although one of the things I really want to shed some light on is I've had a lot of conversation with builders, other agents, and one of the trends that I've noticed with a lot of builders that are talking about, and even some really well-connected agents that I'm close with, there's word on the street that, private equity firms are actually snapping up some of the unsold inventory in some of the pre-construction condos that are due to be or are in the process of being built. So that, that's kind of an interesting thing to see. And, from what I understand, like, really private equity firms are looking at, this is a longer term play, like, buying condos in bulk. And obviously they're buying them at a discount. They're not paying full retail on this stuff. But, the idea is to, diversify their holdings, so to speak, and invest in Toronto real estate, and look to keep it from a rental generation and long-term capital play perspective. So I think it's kind of interesting. It's the first time we really kind of talked about that, because really pre-construction condos is primarily driven by retail investors, and in the past a lot of foreign investors were buying them, but condos are now more end user products for locals, and it's interesting to see that. So anyways, I'm not suggesting that condos are going to come roaring back, but there's a lot of headwinds for the condo market. But all this to say that the weakness that we saw in the freehold market, I expect to continue. And I'm not talking about like 416 or 905. I'm talking about like market broad. Freehold is a challenging market. But obviously, there's certain neighborhoods in the GTA that are performing exceptionally well, and those are typically closer to downtown. Great access to public transit, good school districts. Like those are still very much, especially in the sub $2 million range. Like those markets are typically performing better than others. But I do think, if we look at where performance is from asset class perspective at the end of 2026, I do think freeholds are going to be edging out condos, but the gap is going to be narrowing. So that's what I'm predicting, which is a little bit of a bold statement, but anyways, we'll see. That's where I really think we are headed this year. Okay, so months of inventory, I think will continue to rise until the spring, and then we're going to see months of inventories come down. So why is months of inventory a stat that I look at? And I know I've talked about this many times, but for our new viewers, it's basically how much of the inventory is being absorbed by buyers, right? So more months of inventory typically means prices are coming down, and then lower months of inventory means trends are reversing and prices are reversing. So I think, downtown market months of inventory is higher, but, I think we're going to see a little bit more of a normalization. Maybe it's not the right word, but, a little bit more reversal in both those trends by the end of 2026. So again, my theme is Q1, Q2 is going to be a little bit slower. I'm not suggesting that there isn't a market to sell in Q1 or Q2, but I think we're going to see a little bit more optimism in Q3. So and that's going to be interesting. But again, I'm going blind. This is my crystal ball prediction, and I'm sticking to it. Okay, so interest rates. I've been, as you know, I read a lot of economists' predictions, and most of them are suggesting that we are not going to see any rate change, or a very modest rate change, if that, by the end of 2026. And certainly from the information that we have now, that's likely the scenario. But I actually think there's more headwinds in this market that we think from a macro perspective. And obviously, there's a lot of uncertainty right now. Like there's talk over Greenland, with the U.S. purchasing or acquiring, I don't know whatever you want to call it. The continued conflict in the Middle East is obviously a concern. There's concerns. From a global perspective, and I think our economy in Canada is not as good or as strong as sort of what we're possibly thinking it is, because I think we're going to see a little bit of shall I say like slowing of the economy, like continued slowness, and I think that's going to force the hand of the Bank of Canada to reduce rates a little bit more than we think right now. So I know this is again another bold prediction, and I could be completely wrong, but I think we're going to see 50 basis points reduction by the end of the year. That's just my take. I do think that we are in a declining interest rate environment. I don't see a world where rates would rise rapidly, unless, of course, like inflation comes roaring back, which I don't see. And I just think we're in a world now that we're in a lower inflationary environment, which also means lower possible rates. But again, the challenge is we've got our friendly neighbors down to the south, which are threatening new tariffs all the time, and that is an inflationary, or possibly inflationary certainly for the U.S. if they institute tariffs on their product. But certainly if we're reciprocating on those tariffs on our side, that's also inflationary. But as I said, I think the economy is going to see continued weakness, and that's going to put pressure on our rates coming down by the end of 2026. So predicting 50 basis points on the Bank of Canada rate. My final prediction is always a fun one. I'm usually have some fun sports predictions about the Blue Jays or the Leafs or Raptors, and I'm not going to do that because I don't want to jinx any of those teams. I'm not suggesting what I'm about to predict is going to jinx this team, but I've got a very bold sports prediction, and that's to do with the World Cup. For those that know me, know I love sports, and I love soccer. And I'm very excited for the upcoming World Cup, because first time we're going to see World Cup games in Canada. This is awesome. And of course, for those that you follow, Canada has qualified, well, sort of by default, because we are hosting. But what I'm predicting is that Team Canada is going to make it out of the group stage and qualify for the next round of 32. So that's my prediction. Now, it's a rather bold prediction because for those that you follow, Canada's yet to win a game in the World Cup. That's never happened. They've been 3 times. They've never won. I think they only scored 1 goal. I could be wrong on that. But anyways, I think they're actually going to qualify. They're in a tough group, very, very tough group. And we actually don't know who the entire group is, because there's a slight playoff, and that could mean a really good team like Italy makes it, and that would make it even harder. But I am predicting that we make it out of the group stage. So I am sticking to that prediction and hope I'm right. Anyways, thanks so much for tuning in to our market predictions video. If you're new to the channel, please do watch and subscribe. We produce monthly market update videos where I really dive into the numbers, talk about what we're seeing in the marketplace and where we think things are going. So thanks again for tuning in, and we appreciate questions and support as always. Bye for now, and we'll see you next month.